Welcome everyone to the Great Banking Shift, Bridging Two Worlds, Banking and Decentralization, Why It Matters to the Future of Banking. We're thrilled to have you join us for this special Lunch and Learn. I'm Gidget, your host today, joined by two incredible minds. Gina, CEO of LockTrust, and Jean-Marc, investor and Fintech strategist, who's been watching this shift unfold from the capital markets side. Let's dive right in. Gina, let's start with a question you posed when we were prepping for this. What happens when the lights go out, literally?
The banking landscape today is at a tipping point. Traditional banks are centralized, slower to innovate, and exposed to systemic risks, everything from tech outages to regulatory shifts. Meanwhile, fintechs and decentralized systems are emerging not just to complement, but sometimes to disrupt these structures. Decentralization introduces transparency, distributed trust, and resilience that legacy systems often lack. We've seen what happens, whether it's a solar flare, a cyber attack, or even a cloud provider outage like AWS. When that happens, the digital world pauses. And yet, one thing still has value: trust. That's the heart of today's discussion. Decentralization isn't about tearing down systems. It's about preserving trust when the system fails, giving people backups, options, and resilience.
And that's what makes this conversation critical for investors. Because when we talk about decentralization, we're not just talking about technology, we're talking about the continuity of the global economy.
Gina, could you break down what decentralization really means and why it matters to banking?
Absolutely. At its core, decentralization means distributed trust, no single point of failure, and a transparent system for all participants. Technologies like blockchain, smart contracts, and digital assets make this possible. For banking, the implications are huge. Payments settle faster, risk is spread across networks, and transparency is built into the system. It's not just theory, it's a practical framework for resilience and innovation. For centuries, money was simple. It was paper, a promise backed by gold, and later by the government itself. But over time, that promise became digital. Value turned into data. The issue? It all flows through centralized systems, single points of failure. When we met with the central bank, one of their big concerns was, what happens if the paper dollar collapses before digital trust is fully established? That's a valid concern, because if every transaction depends on one hub, one network, one provider, our entire economy is just one outage away from chaos.
So decentralization steps in to reduce those risks, not to replace banks, but to reinforce the infrastructure of trust.
Exactly. Decentralization is not rebellion, it's resilience. Imagine every business, government, and household connected through nodes of trust rather than gates of control. Each node can validate, store, and secure value independently, like a web instead of a tower. And it's not just about blockchain or crypto. It's about a philosophy shift. Peer-to-peer verification replaces blind trust in central institutions. Multi-ledger systems ensure transactions survive outages. Distributed storage means no single database can take the system down. And when you combine that with existing rails, Fedwire, ACH, Swift, you get fortified finance, not fragmented finance.
As an investor, that's where things get exciting. It's not a new versus old debate. It's the realization that the strongest systems will blend both centralized oversight with decentralized resilience. It's like diversifying a portfolio. You don't put all your assets in one stock, and we shouldn't put all our trust in one system.
Well said. So decentralization becomes the safety net beneath the financial web. Let's run through a thought experiment, the solar flare test. Gina, tell us about that.
Sure. Imagine a massive solar storm takes down satellites and disrupts the internet for 48 hours. Your banking apps don't sync, digital wallets freeze, The economy can't just stop. People still need to trade, buy, and survive. That's where hybrid infrastructure steps in. Decentralized nodes continue validating offline or via mesh networks. Local, tokenized systems or asset-backed ledgers allow trade to continue. When connectivity returns, everything resyncs automatically, securely, and transparently. Even physical cash has a role in this model as the human backup of trust. The goal isn't to eliminate it overnight, but to make sure that even if it disappears someday, trust doesn't.
And this is what's drawing institutional attention. It's not about speculation anymore, it's about continuity. The question investors now ask isn't, will decentralization replace banks? It's, which institutions will adapt first?
Jean-Marc, from an investor's point of view, what does this shift mean? Where do you see opportunities?
Thanks, Gidget. For investors, the decentralization wave presents both risk and reward. The key is to identify bridgeable opportunities, companies that connect the old and new financial worlds. Capital efficiency, resilience, and scalability are top priorities. We're looking at infrastructure plays, hybrid fintechs, and projects that improve trust and compliance while enabling innovation. Timing is also critical. The market is moving fast, and early positioning can yield outsized returns.
You've both mentioned your meetings with regulators and central banks. What's their biggest worry?
They don't fear innovation, they fear instability. Their questions are fair. How do we keep monetary control in a decentralized environment? How do we prevent untraceable assets or runaway inflation? How do we keep systems compliant and safe? Our response, and what LockTrust was built to demonstrate, is that decentralization can embed compliance. Through programmable rails, automated reporting, and rule-based jurisdiction controls, we can make transactions auditable and secure without depending on one cloud, one server farm, or one government node.
And that's what gives investors confidence. The future of finance won't be anarchic. It'll be structured and decentralized. That balance attracts capital.
The way forward is collaboration. We need both worlds: centralized stability, clear oversight, consistent policy, structured security, decentralized innovation, resilience, autonomy, and speed. Think of it like the human body. The central bank is the heart, regulating rhythm. The decentralized nodes are the capillaries, making sure value reaches every part of the economy. LockTrust bridges those systems through cross-ledger settlements, tandem redundancy across nations, and hybrid rails that keep commerce alive even during outages.
So it's not just about future-proofing. It's about ensuring that money, as a system of trust, never fails. Jean-Marc, what should investors walk away with from today's session?
Three things. First, the shift is happening now. Early adoption matters. Second, focus on hybrid, bridgeable opportunities. And third, resilience, regulatory alignment, and scalability are non-negotiable for long-term value creation.
In the end, decentralization isn't just digital, it's distributed trust. It's the safety net that ensures no single failure, no disaster, outage, or collapse can erase value. When innovators and central banks collaborate rather than compete, we build a financial system that's resilient, modern, and interconnected.
And that's where we're headed. From fragility to resilience, from dependency to diversity in how we store and move value. That's the opportunity investors are seeing, not just new tech, but new trust.
Thank you, Gina and Jean-Marc, for these insights, and thank you to our attendees.